Hey guys, welcome back to another episode. Today, I want to take a closer look at four stocks that I have my eye on to purchase this week. Like many of you guys, I try to put money to work on a weekly basis, every single week, either adding new positions to my portfolio or adding to existing positions. Most of the time, I'm usually adding to existing positions as I'm trying to increase my overall kind of exposure in those companies. Today, I do have a new company that I want to start off a position into, and I'm most likely entering in on Friday. So I want to just share some of my bullish points that I have for these four companies. So let's get started. All right, so the first company, and you guys know me, right? This is pretty much even though it's a stock market investing channel, I'm huge in the semiconductor market. You guys are getting probably some of the best semiconductor updates here in this channel. So if you haven't done so, make sure to do yourself a favor and hit that subscribe button. The first company I want to take a closer look at is Marvell Technology. The stock is down roughly 6.6% after the company reported earnings, and I do believe it is a nice buying opportunity for me to start off a nice position. All right, so let's start off with Marvell. Let me just do a quick overview of the company and why I'm excited. First reason I'm excited is the revenue by end market. We can see 34% of revenue comes from the data center, 24 comes from enterprise, 21 comes from carrier, 13 comes from consumer, and 8% comes from automotive. For those that are not familiar with Marvell, this is a semiconductor company that provides leading data infrastructure products for the networking of data centers, and that's very important as you need data to be transferred super fast. One of their products, their leading kind of market share are in PAM4 DSPs, which are digital signal processors. They also have a nice amount of active electrical cables that are obviously connected to those DSPs. They create their own silicon, which are used to create their own processors. They also are creating kind of ASIC solutions and custom built for other players. They also create kind of their own DPUs. They have their own networking switches and kind of those products which are used within the data center market. They're also bringing it into the automobile industry as the automotive industry is become more of a smart industry as well. Now, while I am super excited about Marvell, one of the industries that I believe they can really benefit is the AI market. And I do believe this is why Marvell's stock price took a quick hit, is because it did not meet that AI expectations. I mean, NVIDIA just reported earnings and NVIDIA knocked it out the waters with AI growth. I believe many investors unfortunately believe that most semiconductor companies are going to see that same type of growth that NVIDIA is seeing, but that's not going to be the case. Regardless, they are still going to have some nice major tailwinds from the AI market, and Marvell is definitely going to do that. Marvell, for example, they do mention that their AI infrastructure requires a staggering amount of high bandwidth connectivity that is provided by optically connected infrastructure. Obviously, that is where Marvell comes into. Marvell is enabling AI with a broad range of solutions, optical DSPs, AECs, connecting accelerator clusters, aka GPUs, inside AI data centers. They obviously have Ethernet switches for fabric connectivity inside data centers and custom silicon. They do mention that, hey, look, they're growing their AI revenue. They do mention that AI revenue is expected to exit in this quarter with a quarter of revenue of over 200 million, which is a revenue run rate of 800 million annualized. So again, we can see the AI market is not that big. If this company's most recent revenue was 1.3 billion, and for a full year they expect to make roughly over 800 million in AI, we can see still a small portion, maybe a little bit over 10, closer to 15, maybe getting to that 20%, but it's still very small. But in general, we are seeing that it is growing, and they do believe this runway will kind of continue to increase throughout next year. So this is a company that can definitely benefit from the AI market. A few things that I do enjoy about Marvell is their forward PE ratio. Forward PE ratio is 34 at these levels, and if we take a closer look at PE ratio forward 1 year, it is closer to the low 22. So I think Marvell is giving me a nice buying opportunity at the moment. Obviously, the stock price drops a little bit more, it would be even better, but I don't mind starting off a position right now. Before I go any further, I do want to say thank you for the support. I think we just hit 27.6 subs. I'm trying to hit 30,000 by the end of the year. My birthday is actually in 2 days. So if you guys haven't and want to support and give a happy birthday, and you haven't subscribed, make sure to hit the subscribe button. If you guys want to learn more about the semiconductor market, I do have a semiconductor membership. Click join to learn more. I actually did a deep dive and a deep dive on Marvell's earnings and a little bit more discussion on their products. Here was just a quick taste. Make sure to join that membership to kind of get that full deep dive on Marvell. Now, if you want a special offer to the Fool.com, check out Fool.com/Jose. We have a special offer going on there. And then finally, if you want a free newsletter, check out JoseNajarro.substack.com. And this time, finally, for real.
Finally, I want to thank The Motley Fool for sponsoring this video, and check out Fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so the next stock I want to take a closer look at is Besy, ticker BSIY. And this is unfortunately an international company, so maybe some investors might not be able to buy it. I'm able to purchase it through my through Fidelity. That's the kind of broker that I use. We can see Besy right now in the past year to date is up a nice amount, 79%, almost 8%. And the stock is definitely trading up there, right? It hasn't really given us a pullback. I think that's okay. The company gives us a nice dividend regardless. They have a market cap of roughly $9 billion. So for those that are not familiar with Besy, this is a semiconductor equipment company. What's more impressive about Besy is, sure, semiconductor equipment is boring. They actually deal with semiconductor equipment that is needed for a lot of this advanced packaging that's going on all around the world with things like the H100, the MI300, even the multi-chiplet that we just saw with Marvell, right? They have things like flip chip. They have like their thermal compression, their hybrid bonding, all which is very, very important for that market. And the die attach is roughly 79% of this company's total 2022 revenue. I mean, here they gave us a pretty cool kind of structure of the different assembly process that we're seeing in advanced packaging and 3D chiplet. For example, hybrid bonding is using for things like 3D chiplet and hybrid bonding, chip to wafer TCBs, high bandwidth memory stacking, wafer level die molding. So overall, Besy definitely has a nice market opportunity here, and it gets me super excited. They do believe that they have a nice amount of market share in the assembly, and they are kind of growing almost on a sequential basis, and they do believe that's going to continue to happen. So Besy, for me, is one of those companies that right now might look super expensive. If we look at their overall PE ratio right now, sitting at a PE ratio of 47, this is a market that is growing at dramatic levels, right? We have that advanced packaging solutions needed in things like the H100, which is seeing huge growth. We see companies like TSMC, like Intel, in building up their assembly and testing, which is obviously the packaging solutions that Besy is entering. And we are seeing this huge growth in advanced semiconductor solutions. So for me, Besy is the number 2 stock that I am keeping an eye out on my portfolio. Now, number 3, this is a company I talked a little bit about last week when I was looking at my top dividend stocks, and this is Nintendo. Nintendo right now is sitting at roughly $10.40, traded over the counter again as ticker NTDOY. It's one that maybe some might not be able to trade. I'm able to trade via my Fidelity account. Year to date, the stock is pretty much flat. In the past year, the stock is pretty much flat, and I don't understand, because this is a market, a company with a lot of growth opportunities. First, they do pay a nice dividend yield of roughly 3.1%. They are expanding their IP into other markets, like the Super Mario movie was one of the top movies this year. But they have tons of IP. They have they have Zelda. They have Prime, not Optimus Prime. What's her name? Samsung? No, not Samson. I forget. Metroid Prime. There we go. Zelda, obviously Donkey Kong. They have numerous spin-offs. They have, obviously, they can work with Pokemon and stuff like that. So they are able to kind of bring this IP not only into movies, into cartoons, into toys, into mobile games. So while this is a company that, in my opinion, is very, very conservative in how they expand, they're very conservative in how they expand their IP. I do believe now they're opening it up a little bit bit more, and they will and we'll continue to see some strong IP coming out from Nintendo, which overall would help them grow in their gaming market. They're obviously a big gaming company, and throughout this year, they already have numerous products and projects announced, and these are the ones that are just announced, right? There's other projects that they might have that we might not know about for this year. Even though I think this is crazy, the Nintendo Switch came out in 2018. And even though they haven't really made too many upgrades from there, the OLED, which is their newest version of the Nintendo Switch, is doing amazing. I mean, the Nintendo Switch OLED is probably selling more than the Nintendo Switch did in 2018. Excuse me, we are seeing also huge growth in annual paying users, which is important. They're seeing growth in software as well. So overall, in my opinion, this company kind of saw that weakness after the COVID boom that they saw. But right now, I do believe this is sitting at very, very attractive levels. Nintendo is going to be stock number 3 based on their strong IP, based on the upcoming games, based on the strong global sell-through, and based on their annual paying users increasing almost every year right now. Actually increasing year-over-year basis, and I don't see this slowing down. Now, the final company I want to take a closer look at is AMD. Now, AMD is sitting at roughly $102. Year to date, the stock is up roughly 59%, nowhere near what NVIDIA is up right now. I do believe many are expecting AMD to also grow at those run rates that NVIDIA is doing, but that's not the case. Don't compare NVIDIA to anywhere. NVIDIA is going to be the king in the AI market for this year, for next year, and maybe even for the year after that. Even though they are going to be the crown holder of the AI market, even getting a little bit of crumbs in that industry is going to be beneficial, and I do believe that's where AMD is coming. I'm very big in AMD. AMD is my number 2 position in my overall portfolio. Number 1 is NVIDIA, and I do believe they have a lot of strong solutions, especially in the CPU market, in the FPGA market, in the embedded market. Their accelerators are also pretty strong, but nowhere near the level of NVIDIA. While they are improving in forms of software solutions, in form of additivity and uniqueness, they're still too far behind from the industry leader NVIDIA. Regardless, I do believe they are going to get market share to some extent. Even if they get one market share or even small crumbs in this industry, I do believe it can help overall AMD. For those that are not familiar, AMD is expected to release their MI300A and their MI300X, which will be start ramp production in Q4 of 2023. Again, I do believe sometimes investors get a little bit too what is it when you can't wait, when you someone will let me know, impatient. They are too impatient and they want results right away. I think AMD will give us results in the AI market, but not right away. We might see it in fiscal year of 2024, which will be next year, and I do believe AMD will definitely surprise a lot of investors. If we take a closer look at AMD in forms of PE ratio. Current PE ratio is roughly 37. When we're looking at forward PE ratio is 37 for this fiscal year, which will end in 2 quarters. Forward 1 year, the PE ratio is 24.5. That's looking very attractive. And I personally believe that the estimates that analysts are giving here are underestimating the growth opportunity that AMD can see. So I do believe AMD will be one of those stocks that will surprise expectations, and for that reason will give us a nice amount of market beating results. So in my opinion, the 4 stocks that I mentioned are ones that 3 of them are in my portfolio. Marvell is one that I want to add, and I do believe all 4 can be market beating stocks, and that's why I'm likely investing into them. And I'm super excited. I do want to know from you guys, what are some of the stocks you guys are buying? Is there any bearish reasons for any of the stock? Are you not liking Marvell? Why are you not liking Bessie? Why don't you like AMD or Nintendo? Let me know in the comments below. So I hope you guys enjoyed the episode. Take care. Have a good day, and see you next time.